Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Thursday, June 23rd. U.S. stock futures are pointing to a lower open as investors digest the weekly data on initial jobless claims and await a reading on May new home sales. Earlier this week, a report on existing home sales showed a 3.8% decline last month, and sales are down more than 15% over the past year. It seems like the negative sentiment on Wall Street may persist today, after the Federal Reserve lowered its forecast for economic growth. The central bank now cut the midpoint of its 2011 GDP forecast to 2.8%, down from 3.2% in April and more than 3.6% in January. The Fed also left its accommodative monetary policy unchanged, and it affirmed plans to end its second round of quantitative easing next week. At his press conference following the decision, Ben Bernanke offered no indication that he's prepared to begin a third round of asset purchases to spur growth.
Many analysts believe that hopes for a QE3 have helped underpin the U.S. markets recently, so Bernanke's failure to entertain the possibility could drag stocks lower. It was a big reason for the decline in Asian shares overnight. Overseas investors are also concerned about a slowdown in manufacturing growth in several regions. The HSBC Purchasing Managers Index for China slipped to 50.1. That indicates very slow growth because anything under 50 means manufacturing activity is contracting. Meanwhile, a reading of Eurozone manufacturing dropped to its lowest level since October of 2009, a much bigger decline than economists were expecting. Stocks across Europe are broadly lower on the news.
One of the biggest stock decliners in Europe is Bayer, falling more than 5% in German trading. That drop comes after rivals Pfizer and Bristol-Myers-Squibb reported a successful late-stage trial of a new blood thinner that they're jointly developing. Bayer has been working on a competing product. Shares of Pfizer are jumping 4% on the news, and Bristol-Myers-Squibb is set to open more than 7% higher. Another stock winner in the pre-market is Rite Aid, up nearly 3% right now. The drugstore chain reported a loss of about $65 million in the first quarter, down from last year's levels and better than analysts expected. Meanwhile, shares of ConAgra are falling more than 3% ahead of the bell. Quarterly earnings at the packaged food company more than doubled, but its results and outlook for the next fiscal year disappointed investors.
We'll also be keeping an eye on the technology sector today. After yesterday's closing bell, software maker Red Hat posted a more than 30% increase in fiscal first quarter profit as sales rose 27%. The results topped expectations, sending Red Hat shares up more than 5% in the pre-market. After today's closing bell, we'll hear from competing software firm Oracle, as well as chipmaker Micron Technology. And finally, Research in Motion may get some attention today. The stock is slipping again in the pre-market after a 0.5% decline yesterday. A published report said that the company has lowered its internal projections for its Playbook tablet computer because of poor sales. Despite the reported downgrade, Macquarie Capital initiated coverage of Research in Motion with an outperform rating, saying demand for BlackBerry smartphones is still strong in international markets. That's the latest from Weiss Research. We'll be back after the opening bell with all the economic data and market reaction.